My name again is Bill Spearman. I'm here to testify on behalf of the National Association of Federal Credit Unions. I serve as President and CEO of the Mid-Hudson Valley Federal Credit Union, headquartered in Kingston, New York. Mid-Hudson Valley is a community-chartered credit union serving nearly 50,000 members and with assets of $590 million. NAFCU and the entire credit union community appreciate this opportunity to participate in this hearing regarding credit cards and small business lending. Credit unions are not-for-profit financial cooperatives governed by volunteer board of directors who are elected by their members. At Mid-Hudson Valley, as with many credit unions, our membership includes small business owners and some of the businesses themselves. Cooperative structure gives credit unions a unique ability to design services to meet the needs of the membership. It also enhances the relationship that the credit unions have with their member owners, giving them a unique working knowledge of the way the business is run. This unique relationship can lead to better lending decisions and mitigate risk, and for the credit union and also for the small business. Even though credit unions have been able to grow in their ability to help small businesses, many want to do more. At Mid-Hudson Valley, we are an approved SBA lender. However, some of the cumbersome aspects of the SBA process constrain our efforts to take a more active role in the SBA 7A and 504 lending programs. Moreover, the arbitrary member business lending cap that was established in 1998 as part of the Credit Union Membership Act has also hindered the credit union's ability to help small business. The Credit Union Regulatory Improvements Act, H.R. 1537, and the Credit Union Small Business Lending Act, H.R. 1849, would help to provide relief to credit unions from this arbitrary cap and ease the SBA process for credit unions. Even though the credit union has been able to grow and help small businesses, business lending to our members is a very important part of the Mid-Hudson Valley Federal Credit Union. During the early 1990s, the Mid-Hudson Valley area was left reeling with the closure of the IBM Kingston plant that employed over 7,000 employees. As a federal credit union for that IBM plant, we helped many former IBM employees establish their own small business ventures. Some of the bigger financial institutions in the area were unwilling to lend to these entrepreneurs. As a result, Mid-Hudson Valley stepped in and filled this void. Today, Mid-Hudson Valley continues to help fuel small business growth in our region. Credit card lending plays an integral role in providing much-needed capital for our small business members. Currently, 61 of our business members have credit card accounts with the credit union. These small business members pay their bills on time, and many do not carry balances and thus do not generate a large amount of interest income for the credit union. Absent this capital provided by the credit cards, these businesses would not be as successful as they are today. Credit cards offer a convenient form of payment and an easy way to track expenses. Many small companies often utilize credit cards as a main source of credit. Federal credit unions are the only federal financial institution with a statutory usury ceiling currently at 18%. This helps ensure that small businesses using credit cards from the credit unions do not face predatory interest rates. Federal credit unions have traditionally been responsible lenders and have not participated in some of the predatory practices that are engaged in today. Thankfully, double cycle billing, universal default, hair trigger repricing are not a part of the credit union vocabulary. At Mid-Hudson Valley, we tend to hear the same reasons over and over again as to why our members, small businesses, prefer credit cards to system with their businesses. The ease of obtaining credit, the ability to monitor cash flow with their monthly statements, efficiency, fair rates, and overall convenience are the main reasons why our small business owners utilize credit cards. Knowing our members help us put them in the proper loan products for the business needs. For example, if they needed to purchase a copier for $5,000, we would not put them in a credit card, but rather suggest a term loan for those purposes. NAFCU believes that any effort to restrict credit card practices should be carefully crafted to ensure that smaller financial institutions are not burdened by unnecessary regulation and unintentionally harmed. In conclusion, federal credit union small business lending is strong and continues to grow. However, the current regulatory framework prevents federal credit unions from doing more for America's businesses. Legislative proposals such as the Credit Union Small Business Lending Act and the Credit Union Regulatory Improvements Act would go a long way to helping credit unions to bolster small business growth in America. Furthermore, credit card lending plays a pivotal role in helping federal credit union business members start and grow small businesses. NAFCU urges caution and careful consideration of any legislation proposals that could simultaneously hurt credit union lending and small business development. I thank you for your time, and I'm happy to answer any questions that the committee members may have.